How's it going, everybody? It's Stas here. Hope you guys had a great weekend and are ready to get back into it. I for sure am. And in today's video, like we do every single Sunday, we're going to break down my game plan for this week, some charts, stocks I'm looking at, and overall what my thoughts are on the market. So sit back, relax, take a sip of your coffee, go down below, snag your $50 from M1 Finance. Literally, all you have to do is use my link, deposit $100, and we each get $50 to invest with. And you guys could check out my Patreon if you want. All my real-time buys, sells, call-outs, and a morning update video every single trading day. That's on Patreon, link down below. And with that being said, let's get right into the video. So, like we do every Sunday, we break down the markets first, kind of what happened last week. We'll talk about the futures as well, and we'll go over what I'm personally looking at. So last week we saw a pretty big breakout on SPY, which tracks the S&P 500. We saw the ascending triangle play out. You guys can see we were making higher lows into the overall resistance of 441, 442, and that was happening for the past about 2-3 weeks. And now that we broke out of 442, we hit an all-time high on Friday, almost at 443. This breakout could continue. We could end up going 445, maybe even $450 per share. And QQQ, which tracks the NASDAQ 100, we're seeing a pretty similar pattern. We did break out on Thursday and Friday morning. We actually hit an all-time high Friday morning, a little bit under 370, but then we ended up selling off into the market close, and we ended up dumping back under 369, which was the all-time high from the end of July. We closed at about 368. So for tomorrow, I want to see, do we take 369 out again? Do we break above it? Do we go above 370 to hit an all-time high? That is what I'm looking for when it comes to QQQ. And the futures right now, they're red. Wow, they're actually red. The S&P futures, they're down about 0.3%. That is /ES. The S&P mini, S&P 500 E-mini futures, they're down about 0.3%. The NASDAQ futures, they're down about 0.4%. So it looks like the sell-off is continuing here. And the Dow futures, they're down about 0.1%. So just because the futures are red right now doesn't necessarily mean they will be tomorrow. We notice a lot of the time, look, futures flip-flop overnight, so we could very well, very much so, wake up in the morning and the futures are green and everything's looking very green. So we're going to watch the futures overnight, and now that I'm looking at it, holy crap, guys. Gold and silver, geez, gold is down 3%. What the heck is going on there? Look at that drop in gold. Geez, guys. It's down about $60 an ounce. That is not good whatsoever. Silver's down about 5%. So there's definitely some news coming out, whether it's the dollar getting stronger, maybe something with the bond yields, but overall, geez, oh my goodness. This is not looking good at all for precious metals, which is why if you have exposure to precious metals, and this is not financial advice, I wouldn't go all in. You know, I just look at them as a hedge, and I wouldn't go all in whatsoever just because, hey, if precious metals fall, which they are right now very aggressively, you don't want to be overexposed, and you don't want to be overexposed to anything for that matter. I mean, look, gold just dumped under 1,700. Now it's at 1,699, and gold was just at 1,850 literally a week ago. So you got to be careful. This looks like it's, breaking support after support, so there could be more blood in the water for gold and for silver. So what do you guys think? Let me know down below in the comments. As always, make sure to smash that good old like button if you guys are enjoying the video thus far. And we're going to talk about a bunch of stocks today. I have about 12 here on the list, all of which are reporting earnings. Stock number one is eBay, ticker symbol EBAY. And this is a pretty interesting pattern. We hit an all-time high in the end of July at $74 per share, and now we're down about $10 from that high. In other words, we're down over 10%, and we're under both moving averages, the 50 and the 180 here on the 4-hour chart, and we're now approaching a resistance point from February, also from April, which is right around $65. So I want to see if buyers start stepping in here at around 65, which again was an old resistance. It very well could act as a new support now, especially since eBay is pretty oversold. And we have earnings coming up on the 11th, so in about 3 days from now. So what is that? Wednesday, they're going to be reporting earnings. So I'm looking to see if we recover above 65, maybe start filling the gap to about 70, which is right around the high point from the end of June, heading into the beginning towards the middle of July. And that could be about a $5 price move there, or in other words, that's got to be about 6-7% of a move, roughly. I'm probably right. Usually my mental math is decent. 6-7% of a move from 65 to 70. So I'm looking to see if we fill that gap up on eBay. SOFI is another one I'm looking at. I was reading they are reporting earnings this week as well, but for some reason I am not seeing a little bell icon here, which usually is what you see on ThinkOrSwim when companies do report earnings. And look, SoFi has been doing great. We got a buy alert from Oppenheimer this week or last week. They adjusted their price target from $23 to $25. They're maintaining an outperform rating, so that's not necessarily a buy rating, but it means the outperform rating means they believe they'll, outperform just the overall markets or something like that. So that's looking good. And in terms of SoFi's technicals, we covered this last week, but I'll break it down again. We're at a sticking point, right around $16.80 to $17, but we're making higher lows into that sticking point. So I want to see if the ascending triangle plays out, and if it does, we might be able to fill the gap to about $18, meaning there could be about 6-7% more upside from here. And if you guys are in my Patreon, you know that I ended up selling out of my SoFi on Friday just to play it safe. I locked in about 4% profit there. I bought in the prior week at about $15.90, wrote it to about 16, what was it? I think 1665 or something like that. So I'm going to look to re-enter if we break 17. And I have an alert at 1680 right now, but I'll probably I am going to set another one at $17 and watch it from there. So SoFi is looking good. Fubo is another one that's reporting, and this has just been a dead stock the past couple of weeks. Literally ever since the middle of July, it's done nothing, and they report earnings here on Tuesday, the 10th of August. So we'll see if that rejuvenates Fubo. Maybe it starts breaking out again. And honestly, it hasn't done much since the beginning of July. So over a month at this point, Fubo's been bouncing around $25, $27, really not doing anything. And what I'm noticing here on the 4-hour chart is an inverse head and shoulder. We have the left shoulder, the head, the right shoulder. And if you guys notice, we've been consolidating. The right shoulder has been consolidating right above the neckline, which is a very good sign that we're using this as a launching pad to maybe get back to about $35, $36, which was the high from the end of June. So we just need to see that breakout. We haven't gotten it yet. In fact, we're under both moving averages here on the 4-hour chart. So we must get some catalyst, which I'm thinking could be the earnings report in 2 days from now, to just break us out and start getting us back into that 20, maybe high 20, low 30 territory. So I'm watching Fubo. Upstart is another one. UPST, they report here on the 10th. So a lot of these earnings are on the 10th, 11th, and 12th. Pretty much all of them are that we're going to talk about today. And Upstart is trading above the moving averages. We're seeing a golden cross, slowly but surely. The 50s crossing above the 180 SMA here on the 4-hour chart. And we are slowly trying to break out of the wedge here as well. So this one's kind of early in the breakout phase, which is good for us traders because we want to get in early. We don't want to chase the move or get FOMO or get in too late. And I feel like if we start breaking 138, 135, which has been a sticking point since the end of June. You guys can see, especially if I zoom in a bit, we've struggled at about 135 here on the 24th of June, the end of June, the 30th, middle of July, and just recently, literally last week as well. So if we start breaking 135 into the 140s, I think this one's going to take off. So I'm going to set my alert at $138, and they report on the 10th. So that could be a catalyst, guys, and who knows, this could end up breaking out into earnings. And my price target on this one is going to be around 160 initially, which was the high point from the end of March, followed by probably 170 to 190, which is where we topped off in June, also in the middle of March. So I think Upstart has a lot of upside, but we got to be patient with it. NEO is another one that I'm looking at. This one went down 4% on Friday. Let's take a look. Did they give, usually they give their, let's see. Nope, they didn't give their delivery number. Oh, no, they did. They did. The company, and that was actually 6 days ago. I should have talked about this last week, but the company's reported the company reported July deliveries of about 7,900 vehicles, increasing by 124% year over year, which is solid. And they report earnings here on the 11th, so Wednesday. And as of now, look, we're trading under a key resistance, right around 46, 47 bucks. That is where we struggled last week, the week before. We struggled there also in the middle of June and in the middle of March. So in my opinion, guys, this is a no touch as a trade, that is, and this is my opinion. You guys must always do your own research, but in my opinion, I would want to see it break 47. It's a no touch until it does that. That's going to take it out of that resistance we just talked about. It'll break above the moving averages at that point, and it would break out of the wedge that it's in here on the 4-hour. And from there, guys, from $47, where do you think it's going to go? I'm going to tell you where I think it's going to go. I think it's going to fill the gap to about $53 to $55, which is where it was back in the beginning of July. And overall, 53, 55 has been a sticking point, even back from, January a bit. We held it as support, and in February. And you guys know, when we break a support, it becomes resistance, right? So look for that move on NEO. I'm by no means rushing this. I'm being patient, and let me put an alert here. Might as well, right? I'm going to put my alert at 47.50 and watch it from there. Open Door is another one that's just been destroyed the past couple of months. I mean, gosh, guys, from $40 per share almost down to $14. This stock is down 63%. This is no kidding. And give me a second here, guys. My phone is ringing. Here we go. Okay, never mind. I got distracted there for a second. What was I saying? Open Door, 63% down. Absolutely abysmal. We're noticing the descending triangle as well, lower highs. Plus, we're holding 13 pretty strong, 14 as support. That's a clear descending triangle. And how would this play out? Well, it's going to get bloodier. If the descending triangle plays out, we're ultimately going to break under $13 and start going $12, $11. And I'm not sure if you guys remember. I doubt you guys do. But I have a long position on Open Door from months ago. And I quite honestly, I forgot about it. Like I always say on the channel, I'm an active trader. So I have a trading account. But I also have a couple long-term accounts that I'm not obsessive over, where I'm looking at them every day. I just buy stocks I like and I forget about them in my long-term accounts. And this is one that I did nibble a couple months back. I think it was at like $16 or maybe 17. And now I'm obviously red on the position. And if it does go lower, if the descending triangle plays out, we go 12, 11, $10, I'm going to average down and add a little bit more to my position, because I do like open door technologies over the next 5-10 years. I truly do. And I'm not going to cover the fundamentals today, what the business does, because quite frankly, we don't have time for that. But I definitely advise you all to go look deeper into this company. I think it has a promising future, and they do report on the 11th. I'm not sure if I mentioned that, which is on Wednesday. So keep a close eye on that. We also have Disney, which is one of my long-term investments. I bought this stock for my girlfriend. Well, now she's my fiance. Well, when I bought it for her, she was my girlfriend. And I don't know if I think I told you guys this, but I timed the bottom for her like no other. No joke, guys. She owns this stock at $79 per share. I kid you not. I bought this back in the pits of the crisis back in March of 2020. I bought this for her at $79. I'm not even kidding. And I wish I loaded the boat for myself at that point, but I didn't. I'm not going to lie to you all and say I did. I didn't. But hey, at least she owns it at $79 per share. And it's not a huge position either. I literally bought a couple shares, probably a couple $100. But that's fine. You know, she owns it. She's up a lot. And yeah, I'm going to be buying potentially more Disney in the coming months, especially if we get more fear around the Delta, the CV, all the craziness right now. If we get more fear around that, you best believe Disney might shut the parks, not completely down. I doubt they shut their parks again, but they might limit capacity or something like that, and that is going to drop the stock. And once that happens, if that happens, I will be ready and I'll average more into my position. But as of now, I'm just holding on long Disney. I don't plan on buying anymore as a long-term investment, that is. But as a trade, this could be setting up for a breakout. You know, we've seen support at about 170, 175 over the past almost 3 months at this point. And now we're slowly creeping above the moving averages. We're slowly seeing that happen. And I believe if we end up breaking out of the resistance here, this trend line resistance into 180, 185, this could be a nice trading setup, maybe back to the 190s, 200s. But again, it's one of those stocks that's in the crosshairs right now with the whole Delta situation, the CV. So I'd be careful with it. But overall, I love the company. I can't complain. And earnings are coming out on the 12th. Airbnb is another interesting company, guys. ABNB is the ticker. They report on the 12th of August. So what is that? Thursday? Yes, Thursday, I think. I could be wrong, but whatever. I think it's Thursday. And look, this company, since the IPO, has been very volatile. It's gone from 149 at 220 down to 130. We got a double bottom at about 130. Now we're breaking out. We're above the moving averages. We're breaking the downtrend slowly but surely. We're about to see a golden cross as well on the 4-hour chart here. So I like Airbnb, guys, but I want to see it break mid-150s first before I consider a trading position in this one. Because look, 155, we haven't broken out of that since the beginning of June. We've actually tested it about 10 times and we failed every single time. So for me to mitigate risk here, for me not to get caught in a bull trap, I want to see it break 155. And if so, if it does that, which it very well could, with earnings coming out on Thursday, this could see a nice squeeze from 155 to 165, which is another sticking point, considering 165 was support. all throughout March, into April, into May a little bit. And once the support breaks, it becomes resistance. So from 155 to 165, that's another move that could happen. And from 165, literally, the sky's the limit. It could break out to higher hundreds, maybe 200s again at that point. But I don't want to get ahead of myself because we still have earnings coming up and we're still under 155. So we have to play it by ear, see what happens there. But that is ABNB. And we have Tattooed Chef as well, which I'm also long on. And out of these stocks, guys, let me be honest with you all, I'm not long on all of them. I'm long on Tattooed Chef, Disney, Open Door, Neo, and that's it out of what we just talked about. And I do own one of the bonus ones, or actually two of the bonus ones we'll get into here in a second. But Tattooed Chef, they report on the 12th. They're in a wedge here on the 4-hour. And they're at a point where they're at a crossroads. They got to pick a direction, whether we break out above the moving averages, out of the wedge, and start going mid-20s, or we end up dumping and we go to the teens again. We're at a crossroads, and I believe this earnings report is going to be that direction picker when it comes to TTCF, or the catalyst for it to pick a direction. So we're going to be watching that. Coinbase is another one I'm looking at. I own this one. I believe my average is in the 280s, so it's climbing up slowly but surely. I'm digging myself. Well, I'm not doing anything. I'm just letting Coinbase do the work here. Coinbase is digging itself out for me because I did buy it a bit high, but this is a longer-term play for me, so I'm cool with it. And as of now, look, we closed right at 258 on Friday. That is where we struggled in June and July. So I think if 258 breaks and now that crypto is running, Coinbase could be going back to my 280 average cost, maybe back to over 300 per share, which quite honestly, I would not be mad about that. I would love that. So I'm keeping my eyes on Coinbase. I'm also looking at AMC, which I do own a fun money position in, which, full disclosure, I am getting slaughtered on my AMC position. I believe I'm in at about $60, and now it's at 32, which I'm cool with because I might average down maybe even this week, guys. I'm going to average down and bring that cost to about maybe $40. I might double up or even triple up my position and just have fun with it. You know, I don't have any serious amount of money in this. I could care less about it. I just want to be a part of the movement. So I might add AMC this week. They report, I believe, on the 11th. Let me double check. No, they report tomorrow, guys. Wow, that's actually exciting. Tomorrow after hours on the 9th, they report. So we'll see what direction AMC picks. And that's pretty much it. Oh, I forgot. BLNK. That's another one. BLNK, BLNK Charging. They report this week. And I don't own this one. I don't really plan on buying this either. You know, I did own ChargePoint for a bit. I sold out of that, made some money there. But BLNK, I'd probably trade it if it breaks out of the moving averages here. Maybe starts climbing back into the 37, 38 territory, 40 territory. But other than that, that's all I'm looking at, guys. You know, we covered about 15 stocks in this video. I hope you all enjoyed it. If you did, smash that like button, subscribe, make sure to leave a comment for me, and check out my Patreon if you guys want all my real-time buys, sells, call-outs, literally in real time, whether it's options moves, swing trades, day trades, long-term investments. Everything I'm doing is on Patreon, and you guys get a morning update video if you sign up to the top tier every single trading day. That's on Patreon, link down below. And don't forget to get your 50 free bucks from M1 Finance. All you have to do is use my link, deposit $100, and we each get 50 bucks to invest with, literally free. That's linked down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Click this video up here if you want to see another video from me. Catch you guys there. Peace out. Have a great rest of your Sunday.